Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 30th day of October, 2018, and this is the daily report for gold and silver. Dollar strength as well as a rebounding U.S. equities markets has put pressure on both gold and palladium today as they trade lower. Silver and platinum, however, are trading higher on the day, first to gold. It is a fractional loss, but it is a loss nonetheless, down $2.90, with December futures currently trading at $12.2470. We do have a long position at $12.2740, I believe, with stops that are sitting at $12.1613. The low today in terms of trading was $12.2140. So we did close off of the lows ever so slightly. Silver did gain today about 0.2% or 4 cents on the day, closing at $14.47.5. Platinum up about 0.25%, net gain of $2.30 at $8.39. And finally, palladium lost over 1.5%, a $16 decline, currently trading at $1,062.50. As we said, the dollar certainly had some strength today and contributed to the declines in both gold and palladium, up about 0.4%, a 41-point gain. It is now tracking at 96.76, and that is just 10 ticks off of the highs achieved mid-August when we did have the dollar index on an intraday basis, not a closing basis, actually go to 96.86. Now, as we said, a resilient U.S. equities markets as traders shifted their focus away from the fears of trade wars onto earnings of stocks. Dow Jones Industrial Average gained 431 points at 24,874. Standard & Poor's gained 1.75%, 46 points at 2689, and the composite just over 1.5% in terms of gain, 111 points at 7161. Traders, although today's decline was a moderate decline, currently a $3 decline, gold is fixed at $12.2460. We can see that it is just ever so slightly below the 100-day moving average, which is an average that we're looking at extremely closely, because to me it's critical that we maintain a price point above this particular moving average. As you can see, the average right now sits at $12.2570. We are at $12.2460. So as I said, we're about $1.10 below that price point. I do want to give it a day. Now, we have a stop sitting at $12.1613, so any major decline would stop us out. But if I do see continued weakness, for example, today going into trading tomorrow, we might simply take our stop to the market to limit the loss. We're in at 27, so right now we are down approximately $3 on the trade, not that much. But it's not a matter of whether or not we're down $3, it's whether or not we believe that gold is going to increase in value as we're along. And my sense is that it should, especially with a equities market that is tumultuous as what we're witnessing, where we're seeing 500, 600 point swings on a daily basis. Today closing up substantially higher, gaining 400 points. Yesterday trading down 500 points at the low, closing down 245. And then considering the fact that just recently we've seen 900-point price swings. In the Dow, we've seen 1,300 point drops within a 2-day period. We know that we are in one of the more volatile times in terms of U.S. equities. The key right now in terms of how U.S. equities have been affecting gold is I believe that there's absolutely a positive sentiment from that. However, it is dollar strength that is tremendously weighing down and tempering any kind of real upside move that we could see in gold. I've just put up a daily dollar chart, daily candlestick chart. We can see that the high that it hit today, which sits at 96.76, if we draw our line across, we can see that it is just shy of the high that was achieved, call it mid-August, when the market traded to, I believe, 96.86. However, it didn't close there. It closed substantially lower than that, because what we saw is this almost shooting star that came in the dollar. We have this really, really long tail, and we definitely have a doji style body, meaning the price difference between where the market opened on that day and closed is either equal or really a couple ticks apart. In the case of what we're looking at here, it is absolutely just a couple of ticks apart. The fact of the matter is today's close is above that, and to find a point in time in which the dollar had this kind of value, we've really got to go back past 2018 into 2017, and we can see that the market was coming down from a high of about 104 right here. And back in April through July of last year, we can see that the market came down and actually had this area be a period of support before breaking to lower pricing, inevitably going to these lows at about 88. And that's, of course, the lowest point that the dollar index has traded over the last year and a half, definitely in calendar 2018. So the key is whether or not we will find some resistance at this price point, because if we do not, the next real target for the dollar index has to be a series of highs that come in back in 2017 that are just shy of 100 to just a little bit over 100 on the dollar index, and that is a 3% gain from current pricing. So it is certainly something that we want to be aware of, but the key is going to be dollar strength or weakness and how U.S. equities trade. And I do believe that both of those are going to be very, very much tied to what happens between the trade dispute with China and the United States. And the fact of the matter is that it is no longer a dispute. It is absolutely a trade war with threats coming from both sides. And the most recent statement by President Trump, which was reported by Bloomberg, in which he is stating that he will put tariffs on pretty much all of the Chinese imports coming in, which would be an additional $250 billion plus the already billions of dollars that are already implemented, but will not get ratcheted up to 25% till the beginning of next year. So this meeting next month in November between the two heads, the United States and China, will be critical in determining the future of equities, the future of gold prices, as well as the future of the U.S. dollar. For right now, we are going to maintain our current long position as well as our stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.